Welcome to etvFutures.com. Today is Thursday, February 7th. I'm Caitlin Sisney with your Commodities Open. Crude oil was little changed amid increasing concern that a U.S. economic slowdown will spread, reducing fuel consumption. Crude is trading at $87.13 per barrel on the NYMEX. Natural gas rose on an unexpected drawdown in inventories. The Energy Information Administration reported that U.S. natural gas inventories fell 200 billion cubic feet in the week ending February 1st. Natural gas is trading at $8.06 per million British thermal units. Gold futures edged lower Thursday, trading near $902 an ounce as a surge in the U.S. dollar dampened investment demand for the precious metal. Gold is now trading at $909.70 an ounce, while silver is trading at $16.81 an ounce. Today we're joined by Mike Fitzpatrick from MF Global. He'll give his outlook for this somewhat quiet day of commodities trade.
Good morning, Caitlin. The markets are a little higher this morning, really based on not very much at all. Unemployment claims, while still quite high, were under what market observers had estimated they would be. So people have taken some solace from that, as well as Walmart's prediction that gift cards that have been spent for over the holidays, instead of being used for gifts, are being used for everyday expenses like food and fuel. So I think the market participants are taking some solace from that and from 3 consecutive down days, and there's some slight buying going on here. However, the rest of the outlook for the market does appear a bit grim. The feelings that a recession are imminent has pretty much seeped through all the markets, and there's very little to cheer as far as the macro economy goes. As a consequence of that, energy demand growth is expected to contract pretty strongly going into the second half. Natural gas does remain strong, though, for some strange reason, even though there is burdensome supply and most of the cold weather over the last couple of weeks has passed us by. The meat of the wintertime heating demand is pretty much in our past. There may be some spikes to come, but I don't expect natural gas can hold a rally over $8 for too long. However, one should not look for $2 to $4 again for natural gas as coal-fired plants are becoming, utility plants are becoming a thing of the past, and more they're switching to natural gas, and the financing for new plants is more and more difficult if they're not going to be users of natural gas. But for the moment, though, the fundamentals there are negative in that there's burdensome supply. The weather is very mild going forward for the most part. There does remain a significant position, short position held by speculative interest in natural gas, so it does give that market some kinetic ability to rally very sharply. But again, those rallies will not be held for too long. Similarly, in the rest of the complex, while there might be some short-coming rallies going lower, we've already broken to new lows in heating oil, RB, and crude looks like it's about ready to break that $86 level. That's been very strong support lately. That being the case, if it does break that, then $78, $80 will be the next stop for crude oil.
Thanks, Mike. That's all for your Commodities Open. I'm Caitlin Sisney. Join us later today for the Commodities Recap right here on etvFutures.com.